Hello everyone, welcome back to my channel. Today we gonna do an analysis on how to identify a good stock, its trend, and multi-time frame analysis. So don't look at the name of the stock, but just at the chart which I'm sharing. So how to identify a trend if it's positive or negative? We'll do that on multi-time frame analysis. So as you can see, this is monthly chart pattern. Uh, right from the IPO till date, it has been into consolidation for few years. It moved, it again retested the region, again it moved, again it retested the region, again the same story, and then it is trading near all-time high. So it clearly shows on the multi-year time frame, this stock is on the positive trend. Now, to understand it better, what is the retest zone or what uh, at which level it can be a good buy, we have to do uh, analysis on weekly time frame. Now, in weekly time frame, again, if we can see, this stock has been trading. Uh, just give me a moment. Okay, so yep. We have this data right from 2008. So it listed in 2008, where it was trading near 164, and then it got corrected for a couple of years, and it created a bottom. Right from there, it started moving um, to and been into a consolidation for few years. If we can see, if this consolidation break, it gave a good return right from here till this level. So it was trading near 170. It gave almost 100% return, and right from there, it again got into a phase where it was testing or sustaining the level. Once it broke, it again started trading, and uh, right from 375, it touched 650, and again it got corrected. It has been into a consolidation. It touched nearly 816, and again that it got sharply corrected till 386. This was an exception fall due to COVID, so we can simply ignore this. But after a strong consolidation on this area, when it created a bottom, or when it was consolidating for few months or year, or sorry, or weeks, and when it got broke out, it gave a fantastic move right from 740 or 745 till 1635, making it in top. So we clearly see one thing: when a stock consolidate for a few weeks, and when it breaks the range, it gave a good return. It gave almost 100% return here. It gave almost 70% return here. It gave a fall of almost 50% from here. And if we can see, when it broke the consolidation, it gave almost 50% return again. Or this was in small uh, consolidation. Right from there, it broke and it gave a strong return, or it moved very sharply. Now this is done on the weekly time frame. Now we can go and do a short-term analysis on daily time frame. So one thing is for sure, whenever it does a consolidation and it breaks, it gives a good return. So the best thing is, rather than waiting for any of the technical analysis or doing a random entry exit, you would stick to a plan where you identify a stock, it moves after a consolidation, and it gives good entry point and exit point, is where you have to define your entry and exit to get a good return and not do any random entry and exits. For example, just taking an analysis right from November 2024 till June 2025. Now, what I can say is, when it broke from this channel, this would have been a good entry point first, and you would have exited anywhere near this where you can see it went for a consolidation, and or or you can stay invested because the pattern of this stock is it goes for a consolidation and breakout. It goes for a consolidation or breakout. What I mean to say is it will go for some short consolidation like this. Again, it will go for a breakout. Again, it will go for a consolidation. Again, it will give you a breakout. Again, it will go for a small consolidation. Again, it will give you a breakout. Again, it will go for a consolidation. And again, it will give you a breakout. What does this indicate? This indicate a positive move. Now let's let's have a view on this specific pattern. Now when we see it it consolidated for a few weeks and it gave a return is where I would see a good entry point. Now how long you have to hold, what is your target, what is your stop loss, you have to define. But in ideal case, like I always say, an ideal entry point for a stock is 2 to 3% or maximum 5.5% of a stop loss, and at least 1 is to 2 uh, ratio of a return. So if say your stop loss is 5%, you should at least have minimum 10% or 15% is what you should wait, so that in spite of stop loss that you take in market, you still survive and hold for a longer time. Say now this is what we sorry. Now this is what we anticipate. So your stop loss should be say 5%. That would be your, and if you expect 10% of return. So ideal 10% comes here. So if you have made an entry after this breakout, your entry point would be 1100, and you would mark your target by anywhere in between 10% to 15%. Okay, so this is how your chart should look like, or your entry exit should look like. Now, this is nothing to do with your price. You have to define with the percentage for how many swings that you can take, how many entry exits that you can plan, and whenever you take a stop loss, your stop loss should not exceed 5% max. The best setup is 2 to 3% of stop loss, and at least 2 to 3 times. So if 3% is your stop loss, so your exit on the profit side should at least be 9%. So 1 is to 3 is the good ratio that you can plan. And it depends stock to stock. 1 to 2% is also a good entry exit point. The best entry exit point that you define on a stop loss basis is 3% of stop loss and 10% of profit is where you exit. Irrespective of price, your stock move should either hit your stop loss or either hit your target, is when you make an entry and exit. On the similar basis, once you do a multi-time frame analysis on the stock basis on the technical patterns and charts is where you get your entry exit. Now this doesn't mean you go and get random entries or exit on any of the stock. You should see pattern on the technical side. If it's meeting multi-time frame analysis, multi-time frame analysis, you get a sense of stock that either the stock is going to move on the higher side or the stock is going to be on the downside. So if you see the stock is on the downside or it's in the negative territory, then you should not be entering those stock. Don't gamble with your hard-earned money. This is very thumb rule that one should identify and follow. The best entry exits will make you survive in the market for longer run. And even if you find a good entry exit point on any of the stock, you should not be holding your entire capital on one stock. You might be 90% right on your analysis, but if market want to move against your planning, then you should not be exiting or entering with your large capital. So for example, if you want to invest 1,000 rupee in market, what you can do, divide it by four stocks. So either you take entry with 250 rupees in stock A, you take entry with 250 rupees in stock B, you take 250 rupees entry in stock C, and you take 250 rupees entry on stock D. So your risk is better managed. Even if you hit stop loss, you are not wiping out your entire capital. That is how you should maintain your risk appetite. That is how you should maintain your analysis on a stock. And this is how you should maintain on identifying a stock, whether it's on favoring your risk to reward, whether it is in a positive trend, whether it is giving a good entry exit point. Say if you miss entry on this very entry, the second good entry is this, because stock, like we discussed, is in consolidation, and once it consolidate, it will give a breakout. So the best thing is you identify a stock where you see a small consolidation of minimum price which is not moving higher, it's into a tight consolidation, and you take an entry here. So this is a small time frame entry exit. So when it broke, you get a good entry. You can wait till here. So this will give 20%, 17, 15% return. Again, it got consolidated. It created a drop box. It consolidated, and when it broke this, you get an entry. In one candle, it moved roughly 100 points. So points is not an criteria of entry exit, but how you can plan your entry is more important. Again, it got consolidated, and when it broke, it gave a good entry exit. Again, it got consolidated. This time it was a bit on the longer side, and this was a little bit of choppy, but when it gave a good move. So this is how a structure works. This is how you should define your entry exits and manage your risk better. If you like my video, do share with your friends. And one thing I forgot to mention at the start of the video is this is purely my analysis. This is nothing to do with your entry exits. If you're planning your investment, do consult with your financial advisor. I am not a SEBI registered analyst, but plan your trade entry well is what I want to teach today in this video. Thank you for watching.